Happy February. I'm so glad that you are joining me again this month. It is the month of love, and so I wanted to take a moment to say thank you to everybody who has watched and subscribed to the channel. I got a couple of you who called me last week to talk about some of this material, which is super exciting for me. So if you are out there and you want to talk, just give me a call. I'd love to talk to you. Let's talk a little bit about what I got the phone calls on last week. People are giving some mixed information about interest rates. Obviously, nobody knows exactly what's going to happen, but all of the signs that I'm seeing lead to the fact that interest rates are going to stay above 6.5% in the high sixes, maybe hopefully potentially coming to the low sixes by the end of the year. So while we are hopeful to see more improvement in interest rates, we may also need to accept that this is just the new normal. And there is some data to suggest that I am not the only one that is of that mind. So I have a graph here that shows you mortgage applications over time. We saw a spike at the beginning of this year, very similar to the spike we saw last year around the same time. The only thing that's different here is that last year, interest rates came down to about 6%, mortgage applications spiked. This year, interest rates kind of went up a little bit, and mortgage applications spiked about the same amount as they did last year, which, you know, when you think about buyer sentiment, that probably just means that people are like no longer able to wait. There's been 2 years of sort of bated breath, holding to see when interest rates will drop, if they're going to, and with all these signs pointing to the fact that they're going to be this way for a while, I think a lot of people are just going to get on board. If you have to move, you have to move. I'm going to go over at the end the good news about being in a high interest rate environment, some things that I have done and some other things that you should maybe think about. Let's go over into the active and pending report. I don't love to toot my own horn, but you know, I pretty much predicted this is exactly what's going to happen. Same thing happened last year. Inventory dropped and pendings went up. And we're seeing the exact same thing this year. Inventory is dropping. No new homes are hitting in the market. Less competition for sellers, with more buyers entering into the pool, right? So, or mortgage applications are up, and so are pending contracts, which a lot of sellers last year waited until the March, April timeframe to put their home on the market, which is what most people do. The bad thing about that is you do it when everybody else does it and the market becomes saturated. So timing is super important. I know winter can be tough, but also if you can push your listing, if you're thinking about doing it this spring, just slightly earlier to beat the curve, capture those buyers entering into the market before you have more competition hit, it could be helpful for you selling quicker and at a higher price point. So lastly, I want to talk to you a little bit about high interest rates environments. They suck. I mean, we just bought a 2-bedroom, 1-bath for $390,000, and our mortgage payment's $2,500, and that's with 20% down. That's painful. I know that's not easy, and most people don't need a 2-bedroom, 1-bath. They need more than that. So things to keep in mind, though, if you are in the market or if you are an investor when there are higher interest rates, it's less competition on the buy side. There are buyers just standing on the sidelines waiting, maybe getting a rental right now. So if you have the money to invest, the rental market might be strong because there's so many buyers outside the market, and you're going to have less competition with buyers not coming into the market right now. And then conversely, if you're a seller that's on the market right now, you probably have to buy as well. But you're probably, motivated. Let's put it that way. If you're on the market, it's probably because you have to be. And so motivated sellers, less competition, maybe that hopefully means a better price for you. And then the other thing that's always true, rates don't stay high forever. So we may have to wait a while, but eventually the rates will come down and you can refi. It makes most sense usually when there's about a 1% difference from your current mortgage rate to do a refinance. So hopefully we get to see something like that next year. The other two things that I want to point out, these are ancillary to affordability, but they do affect you. The tax advantages of buying a property. So the government has a rule, it's called the cost segregation rule, which allows you to front load your depreciation, right? So every time you buy an investment property, you get a tax credit for that. You get to write off that property's depreciation. Normally what that does is allows you to write off small amounts of depreciation over the course of owning that property. Cost segregation allows you to front load a certain percentage of that, basically giving you a huge tax write-off in 1 year. You won't get those smaller write-offs in the years subsequent, but if you're a savvy investor and you buy a property, even a small 2-bedroom, 1 bath every year, you can get huge tax advantages. It saved us like probably $5,000 to $30,000. So things to think about, besides affordability and rents, the tax advantages are significant. And then the last thing that I want you to think about is that smart investing pays off. At the end of the day, it always comes down to your ability to buy and the opportunity presented to you. I bought a fourplex in 2023. It was on the market for $593,000 or $585,000. It had 6 offers. All of those offers fell through because nobody wanted it. It was too stinky. I waited. I even had clients offer on it. I waited about 30 days. I got in. I got that property with about $60,000 in seller credits for about $593. So I bought the property for $593. Interest rates were pretty high at that time. It was painful. I remodeled it over the course of 4 months, and then 12 months later, the end of last year, I went and got it appraised. I put $150,000 into it. The property appraised for $954,000, right? That's a huge increase in equity. What I was able to do with a cash out refinance was pull that money I put into it. All that 150 that I put into the property, I took it back out and I kept it to reinvest in the little 2-bedroom that I bought now. I cost segregated both of those and was able to write those off. So if you can find the opportunities, and I'm always searching for them, if you're looking for them, let me know. We can go out and find something that's stinky and make it better. And hopefully if interest rates come down, by pulling out that cash and interest rates coming down, your payment may remain flat, right? That's all I got for you today. I'm super excited that you guys are reaching out to me, so please continue to do so. We have our Valentine's Day event this Thursday, February 13th at A Cafe. So if you're local, you are in town, we are making free bouquets for you, sending some more love out your way. And so if you're in town, 5:30 to 7, A Cafe downtown, we'll make you a free bouquet. I hope to see you there, and if not, I'll see you next month.